One is to understand what industry you're in and what are the general industry metrics that, generally I should be hitting as a business. Then say, okay, well, how do I beat it? Right. So the first is make sure you have a good process to close the books and get good financials that you can trust. The second step.
All right, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. And today I'm talking with Jason Kruger, and we're going deep into the financial analysis and review of a company and valuations and why it's so important that business owners and investors pay attention to this, as well as the things you need to look out for when it comes to scaling and preparing to exit a business for maximum dollar. So if you're a business owner or if you're an investor and you're wondering, okay, well, how do I analyze a deal financially and look into the numbers? This is the podcast for you.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
All right, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes, and I'm joined today with Jason Kruger. Jason, how are you doing?
Good. Thanks for having me on, Jeff.
Absolutely. Really excited to have you on here. And you just went through an acquisition or an exit, rather. So we're going to be talking a little bit about that. But before we dive into all that stuff, why don't you tell folks a little bit about yourself and how you got to where you are today?
Yeah, absolutely. So my background actually is in finance and accounting. So happy to talk about the importance of that in businesses as they grow. Started my career in public accounting, spent the first couple of years with Moss Adams, which I know is big up in the Pacific Northwest where you are. Then after a couple of years, I went over to Deloitte, which is obviously one of the large big four firms, in financial statement audit. So spent close to 10 years there and saw a real need in the marketplace for small and mid-sized businesses as it relates to the accounting and finance function of their businesses and the value that they were getting out of that. And so a lot of businesses in the small market really look at accounting and finance as a necessary evil, meaning they got to pay bills, they got to invoice, they got to collect cash, make payroll, and file their taxes. And so as they grow, they start to feel a lot more pain points associated with the accounting, cash flows of their business, financing opportunities, bringing on investors, those types of things. And so I left Deloitte and started a company called Signature Analytics in 2008, and where we provide that financial and accounting leadership, and we support companies in the small and mid-market with their growth by really driving value within the accounting and financial arm of their business through better processes, better reporting, better visibility into the financial side of their business to make decisions, and also collaboration with potential investors or existing investors, banks, financing, all those types of things. So grew that. We have about 75 full-time employees. All of their team is all full-time. We're not a staffing or recruiting agency. It's all full-time employees with processes that we've developed to help our clients. And then we were acquired actually in November of 2024 by a firm called Citrin Cooperman. So now I'm part of Citrin Cooperman. I'm officially a partner at Citrin Cooperman. Citrin provides all types of services from audit and tax support to now they're really looking at the advisory services that they can provide clients, similar to the services that we provided our clients as a standalone company. And so they're really looking at us to lead that function of the firm, along with now we provide advisory system implementation, so NetSuite, Microsoft Office products, M&A. We have an M&A group, everything you could probably think of under the sun. So I've gone full circle now from starting my career in public accounting. Now I'm back at it. But it's a really exciting time in that space. A lot of consolidation, a lot more services that our firm and firms now can provide that really drive value beyond just doing taxes and performing audits. So it's a good time to be in this space right now.
Awesome. Well, I know there's a lot of M&A activity out there right now. There's always a lot of capital raising activity. And I got to ask, okay, so we've been working through a number of different acquisitions with ourselves, our clients, and so on. And there's always hiccups, right? There's always hiccups when it comes to it. I have to ask, personal question, were there any hiccups going along with your exit, given that you guys are in the accounting space and you should know all this stuff inside and out, right?
Yeah, I mean, there's always some things that come up that make it more challenging. I think being in our space, we have to, practice what we preach, I guess, in a lot of ways. And building a business, I've always looked at building a business in a way to looking at what is my potential exit.
Right.
And in that, it's, how am I always positioned to maximize enterprise value at all times? And so if something does come up, I'm prepared to go through an exit at that time. I don't have to throw a bunch of stuff together and try to exit or try to sell my business, or, something comes up, all of a sudden I'm not prepared. So I felt that we were always prepared. We had our ducks in a row for an exit if an opportunity came up. So we actually went from LOI to closed deal in 60 days, which was a lot of work to get done. They actually brought in Deloitte from a due diligence perspective, which made things probably more difficult and challenging than they needed to be, because they sent us a 350 line checklist or request list for due diligence. But we were on top of it. We had everything, already pretty much prepared. We had information prepared in advance before we got to the LOI to get to the LOI from a negotiating perspective. And then I was also pretty proud of the fact that the final deal was based on the LOI. So there was no negotiating after the fact once we went through due diligence. And I have to give Citrin credit as well. I mean, they lived up to everything that we lived up to everything that Citrin said they were going to live up to, as far as, living up to their word, the people, the culture. And that was what made us most excited about being part of Citrin to begin with, was really the culture that we saw and how they looked at clients and how they looked at businesses. One thing I will throw in now for your audience, because I know that it's an investment focused podcast, is Citrin is one of the first firms that brought in private equity from a CPA firm world and public accounting. And they are the first firm that actually retraded that private equity. So Citrin brought in New Mountain Capital about 3 or 4 years ago. And in January of this year announced that Blackstone is now buying out New Mountain. So Blackstone being the largest private equity firm in the world. And that deal is hoping to close actually on April 1st, 2025. So for us, and had at the point we're recording, that's supposedly is closing this weekend. And so hopefully everything goes forward with that. And, so it's pretty exciting.
That's amazing. Yeah, that is a wild ride. And I got to be honest, like 60 days, that's lightning fast when you're talking about a company with 75 employees, right? We've been dealing with things going back and forth for 6 to 8 months on smaller deals than that. So congratulations, that's awesome. And how did it, just walk us through the emotional side of it. Like, how did that actually feel, finally being able to exit your business that you started when you said 08?
Yeah, in 08. Yeah. Yeah, it is. There's a lot of emotions involved. Sometimes they're mixed. But I think that, looking at the market, looking at where we were, looking at what my goals were personally and professionally, everything seemed to line up with what we were looking for. So I would consider it, we got, personally got the quote unquote number that I was looking for. It was a good deal. We weren't in a situation where we had to sell the business. So we had leverage because we had a good, profitable business that was growing. And so we weren't in a situation where, the bottom was falling out. We were trying to scramble to get rid of it. So we had a good business. And as a result, we were able to attract a firm, I believe, like Citrin, that allowed us to, that really wanted to partner with us moving forward. And so that was important as well, is not only me, but our employees. Citrin gives our employees so much more opportunity now to continue their career and be successful in what they're doing. And I've always looked at building the business that I had, Signature Analytics, is really building a platform for our employees to be successful in their careers and to have that growth and opportunity. And I feel they were able to because we were always in growth mode. We were a growing company. We serviced all different types of companies, all different types of clients. So they got to experience different types of industries, different types of situations, different types of companies. And they weren't, our team, it wasn't, they weren't beholden to the individual ahead of them leaving for them to be promoted. So because we were growing, because of how we were structured, if they proved that they were ready to be promoted, they were promoted. So we never did not promote anybody because we didn't have the ability to, because there just wasn't room. Everybody was able to do that. And so now moving forward, it gives them even that much more opportunity to grow in their career, build their resume, hopefully stay longer. But even if they don't, they have a good resume to move forward beyond, where they're at now.
It's awesome. You just dropped a lot of information there for anyone who's thinking about building a business. But I think the most important thing you said earlier was you always have this idea of building a business to maximize enterprise value, right? With the intent that if something comes along, I want to be able to sell my business if it's a good opportunity, which you did. So what do you mean by that, maximizing enterprise value, for people that may not understand what that means?
Yeah, I mean, in its simplest form, it's like, okay, and we ask our clients this all the time when we talk to them. It's one of the first questions is, well, you have this business, you've grown it, you've been successful. What are your goals with your business? Do you want to hold on to it for 20 more years? Do you want to transition it to a family member? Do you want to transition it to employees? Or do you want to exit and sell it? And maybe your goal is to sell it in 3 to 5 years. No matter what the situation is, in my mind, it's, you always want to be looking at maximizing what the value of the business is worth, especially if you're exiting to a third party. And what I mean by that is, if you have a business, it's important to understand first how your business is valued in the marketplace. So if you have a standard, let's call it a manufacturing business, it's more likely that that business is valued on what you call a multiple of EBITDA. So it's basically, a function of your net income profitability, and adding back certain things like depreciation and interest and so on. So now the market may say your company may be valued at either a 4 times to, let's call it a range of 4 to 8 times EBITDA, or maybe it's a 6 to 10 or whatnot. Well, if I'm a business owner, I want to sell and I know the range and how my company is valued in the marketplace. I want to position it to be sold at 8 times EBITDA, not 4 times EBITDA. So how do I do that? And so thinking about what that means, how do I do that? How do I maximize and get closer to the 8 times EBITDA versus the 4? That's 2 times. That's a 2 times valuation if you're selling at 8 versus 4. So some of the things that do that, just the quick low hanging fruit, is customer concentration. If 80% of your revenue is based on 1 or 2 clients, that's going to reduce the overall value of your business because there's more risk. So looking at overall risk and how you reduce that risk will increase the overall value of your business. How much of the business relies on you, the business owner, so that if you do leave or you sell and you leave, is all of that knowledge going out the door, and is there any value beyond yourself? So if you're the number one sales guy, if you're the number one, person, if you're the number one person with all the client relationships and you leave, how much value is left? So how can you build that infrastructure and that management team below you to ensure that that the business isn't solely dependent on you? And ultimately, you want to build a business so that you can walk away and it still operates and runs and can be successful. And then what's really near and dear to my heart is, what do your financials say? Do you have a good process to produce timely and accurate financial information that somebody can trust? You may have great operations, you may have a great process, you may even be very profitable, but if you can't, but the first thing that a buyer will be asking for is, let me see your financials. And if you give them a printout from QuickBooks that may or may not be accurate, and just doesn't tell the right story, you're going to lose instant credibility and your multiple is going to go down. It also gives the buyer an opportunity to know that maybe they're not working with somebody that's as sophisticated as somebody else. And so they have an opportunity through the, even after the LOI, to knock down that sales price because of risk associated with comfort in the accuracy of the financials. So having accurate financials and good data and good reporting and good KPIs that you can show a buyer is critical to maximize that overall valuation of your business.
Yeah, I love that you hit on that because we actually just went through with one of my companies. We just went through that exact situation where going through due diligence, lawyers are looking at everything, diving under the hood, and people who've never gone through due diligence. I mean, this was a small company, sub $10 million in revenue. It's a lot of work, right? And there's a lot of things you're looking at. And then it was found out that essentially it was, the way that they were doing the financing was borderline fraud, right? Because, owners will tend to use their business as a piggy bank. And then when they file their taxes, if they don't do it properly, because they're, like you were saying, just pull the printout from QuickBooks and call it good, and then you have somebody that actually knows what they're doing going through the due diligence. Like, wait, guys, this is not really what you were selling us. So I think it's really important that people understand that, and understanding the financial KPIs are really important. Everybody looks at really top line. Everybody looks at revenue. They want to look at exactly what the revenues are, and that's great. And then they look at bottom line. But there's sometimes thousands of rows in between there, right? Yeah. So when you start talking about financials and accounting and making sure things are done correctly, what are some things that, whether you're potentially buying a business or maybe looking to exit your business, you should really be paying attention to as far as the financial KPIs?
Yeah, I mean, one thing I was thinking about as you were talking too is that I also wanted to point out is when you talk about EBITDA, there's always there's EBITDA, but then there's adjusted EBITDA, and what that means is knowing who your buyer is. If it's a strategic buyer, and they're going to absorb your part of your team, and maybe you have a back office, they have a back office. Well, if the buyer is not going to ultimately going to reduce headcount because of that, you might be able to have an opportunity to carve that out. Those costs associated with your business, carve those out to show a higher EBITDA and demand a higher price point, because the buyer is getting the benefit of not taking on those costs. So that's one thing that's very important, is also having that level of expertise, I believe, to say, hey, understand what the buyer is really looking at and what they're truly buying, so that you can maximize overall value too. What I always look, I mean, again, it's when you're talking about KPIs and financials. One is to understand what industry you're in and what are the general industry metrics that generally I should be hitting as a business. And then say, okay, well, how do I beat it? Right. So the first is make sure you have a good process to close the books and get good financials that you can trust. The second step is then develop a reporting structure that really starts to dig down into different aspects of your business, so you can get more clarity and more granularity into how you're looking at your numbers. And so an example of that is, for me, it always starts with the margins associated with the product or services that you're selling. It's critical to know the margin of your business, and what I mean by that is, if you're manufacturing, it's basically what you sell a product for minus the cost of that equals your gross margin, and then that percentage is critical. So your gross margin percentage is critical to understand. And so when I ask a business owner, I say, "Hey, what's your margin?" and they say, "Well, it's somewhere between 45 and 50%." Well, my question is it 45%? Is it 46, 47, 50%? What is it? Because 5 percentage point difference on a $10 million business is $500,000. And so that's a lot of money to a $10 million business that could go to the bottom line. It could, go in the owner's pocket. So how do we get that down to where we understand to the percentage point what our margin expectation is? And then once we get that, then we can start to look at the business on how to improve that. So if we're at 47%, how do we get to 48 or 49? And each percentage point in a $10 million business is $100,000. And so that allows you to either reinvest back into the business for future growth, or take that as extra profitability as a business owner. And so those are the metrics that really we want to be looking at from a gross margin perspective on. And then, really starting to dig down at, again, taking manufacturing, you have different products. One product may have one margin, one product may have another. So then you can start to determine how you sell those products if you're pushing one product versus another to become more profitable. And so those are all important aspects of understanding, and ultimately getting to higher profitability, higher business valuation, and so on.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
You're bringing me back to my MBA days, and it's kind of funny when you think about this stuff. Like entrepreneurs and business owners, you talked about using small and middle markets where you guys focus a lot. So sometimes the middle market, it may not be the founder that's running the business anymore, right? But generally in the small market, you are still talking about a founder CEO in certain cases.
Right.
And I'd imagine, just having worked with a number of these people, they have a very, very different mindset when it comes to everything you just described versus actually what I really like doing is just, running the business and the people of the business and the product and the customers. And you're talking, what you just mentioned is probably Greek to a lot of people when they first come to you, isn't it?
Yeah. Yeah. And my point is, hey, you've built this business. You actually deserve better. Like, you've put blood, sweat, and tears in this. So you deserve to maximize, you deserve to get, your reward out of this. Right. And business owners, I mean, they are the ones that took the risk. They're the ones that have, people that don't run a business, they think, you run your own business, you could take all the time off you want, and you can, go play golf and whatever. I mean, business owners are working around the clock. They're the last ones that get paid when business isn't doing well. They're stressing because now do they have to have, layoffs that they're not able to pay themselves? How are they going to make it? I mean, it's tough to start a business and to run a business. And so if we can do anything to help them, even give them more clarity on the cash flows of the business. The first thing that we do with our clients is sit down and say, okay, let's give you confidence so you know what the cash looks like in your business looking forward for the next 13 weeks, which is basically 1/4 of time. And let's roll that forward every week so you have confidence and when you can make payments for AP, when cash is coming in on AR and those types of things. And so, a lot of it is, as you just alluded to, a lot of it is education. And the ones that, are open to, under building that understanding and growing are the ones that truly are the ones that can, make it and take that next step.
And I think it's just, it's a big change psychologically, mentally for a lot of these folks, right? Because, and not to be rude about it, but they say, okay, well, yeah, the bean counters will take care of all that stuff, right? Or, leave that up to the bean counters. They'll figure all that stuff out. But at the end of the day, a business is about making profits, right? There's no ifs, ands, or buts about it. If you're not making profits, you just better be really good at raising capital on and on and on, and hope that you don't end up like a Bernie Madoff kind of situation, right? That you actually have an underlying business there. And so I think that for a business owner to not understand, not just profitability, EBITDA, net profits, things like that, like those are important. But like you said, cash flow is even more important a lot of the times, because understanding your cash flow and timing payments properly. Even going back to when you set up your fiscal year end, right? Especially if you're a holding company and you have multiple businesses and there's tax strategies involved. Like there's so much that goes into this that for a business owner who literally going back to the manufacturing, hey, I got really good at being a machinist and people started coming to me and eventually I bought my seat.
Yeah.
Now I have a business. They don't want to think about all that stuff, right? So it is a lot of education. But what do you say to the person that's like, listen, I still don't get it, right?
Yeah.
Do you encourage them to go after, like, if they don't have a CFO on their team, for example, what's the conversation like when they're like, maybe making, 7-8 figures in their business and they don't have a full C-suite yet?
Yeah. So it goes back to a couple. So now I'm going to put my business owner hat on. It goes back to what I mentioned before is ultimately, if you do want to exit your business, the best way to do that is to start to build process underneath you. And that involves building a management team that you can trust and start to give ownership to, not physical ownership in the company, but like process ownership too.
Right.
Because the biggest challenge for business owners, including myself, is it doesn't matter. Nobody can ever do it as good as the business owner. And that's the reality. Nobody has put the blood, sweat, tears. Nobody has the passion for it. A lot of employees, turn the computer off at 5, 6 o'clock and they don't think about it again until the next morning when they wake up. Business owner is always thinking about it. They're thinking about it when, they're waking up in the middle of the night thinking about things. And so nobody ever is going to be able to do it as good. But if you can build the processes and build the management structure around it, you can get close. It's probably not going to be as good as you can, but you have to build, if you want to grow, it's, you hear the term scalable. You need to build a scalable business. It's got to be scalability. Like you can only get so big having everything go to you. So you have to build the management team to do that. The CFO is part of that. Once you get to a certain size, what I would argue is that's why our business has been successful, is because instead of hiring a full-time CFO for at a minimum $200,000 a year, with probably a lot more these days, you don't need a CFO for 40 hours a week because there's just not that much work for him in a business like smaller business. So why not leverage a CFO resource for, partial time, but they're part of your team, but it's part of the time. And so same thing. But the other thing I would say too is your point before, I hear a lot of business owners say, okay, well, I'll grow and then I'll just hire a bookkeeper and they'll take care of that. And then as I grow more, I'll hire someone that can run sales and they'll take care of that. And then I'm good at, because I'm a machinist, I'll run the operations. Well, what ends up happening is without leadership, again, nobody knows the business as good as you do. Sales, hiring salespeople 9 times out of 10 doesn't work out unless they have direction and you can provide them support and structure. Same things with hiring the accounting. If you don't understand and know what's going on, you're not going to get good information. So if I could make any recommendation to business owners, it's know your business, all aspects. Start to become an expert in sales and marketing. No, you don't have to understand how to do journal entries and debits and credits, but know how to read financials and know what you want to look at and what's important from a financial perspective. The operational side, a lot of business owners already know. Start to understand even HR. HR, I was like, I don't even know what HR is, really. But what's the importance of HR? It comes down to culture and employees and how you support your employees and provide them structure to be able to be successful in not only your company, but in their career. And so you can limit employee turnover, which is also very valuable to your business. So start to learn those aspects. And you really got to dig in to do that. You don't have to be the expert. You hire the expert, but you got to know it so you can provide direction for the experts.
Right. Yeah. One of the best pieces of advice I got early in my career, I was a manager at a really large company. And I ended up having guys that were twice as old as me that worked for me. And I went to my boss, as vice president of the company, and I said, listen, I feel like I need to know more about what they do because I don't feel like I can help them. He goes, you don't need to know all of what they do, Jeff. You need to have an understanding, but you need to know how to motivate them to do their job properly, right?
Yeah.
Make sure that they're doing their job properly. I said, well, it's hard for me to know that without knowing what they do. He said, well, again, that's part of being a manager, right? You got to figure out what you need to learn and what you don't. But to what you just said, you don't have to know, you don't have to be the expert in all things. But you do have to be informed enough to know when the person's either not doing their job properly, not doing it well enough, or pulling the wool over your eyes, right? And I think that's a big fear of a lot of business owners, which does bring me to a very specific question, because I've encountered this with a number of businesses now, and I'm curious, since you are an expert in this space, what your thoughts are, which is when it comes to scaling a business. Like I've run several 8-figure businesses. We're in acquisition mode on a few other 8-figure businesses right now, and they get to a certain point where you need a finance department. You need more than just one person. Like, you do not want to, as the CEO or the business owner, be signing all the checks. And this is, I think, one of the biggest fears that most business owners who would transition from I'm in charge of everything to I need to delegate access and things of that nature is the money, right? Controlling that money. And so you have these people in your business. Most people have a bookkeeper. Okay, we got that. We got a bookkeeper. Then we have a CPA who does the taxes at the end of the year. But then there's this CFO and controller and all this sort of stuff. And somebody has to eventually say, hey, listen, Mr. CEO, Mr. Owner, you haven't made payroll because you forgot to sign off on this thing on time. And now everybody's delayed, right? And so they do have to hand that off. So what is a recommendation you guys make to people when it comes to finally delegating the financial controls of the business to somebody else?
Yeah. So a lot of business owners, like you said, is they think, okay, well, I'll hire a bookkeeper, and that gets them through there for a while. The challenge is, what we see a lot of times too is if there is only one person, I mean, that's a huge risk for a lot of reasons. Especially if the business owner doesn't have a lot of financial acumen or isn't paying close attention. It's a huge risk, because if that person up and leaves, then you have nobody that understands what's going on. So that's a big risk. Then can't get invoices out on time.
We actually had something like that in our business die. We had somebody that actually passed away, and we're like, oh my gosh, we don't know everything. And that was a wake call. So yeah, I get it. Yeah.
So you have that. And then the other risk is they have full control over everything, and it's pretty easy to start funneling funds off to yourself. And a lot of people, they may be a good person or they initially, but the temptation is there. All of a sudden something happens at the office, and somebody gets a raise and they don't, and they feel that they deserved it, and so they justify it, and then over time it just snowballs on them. So we've seen some pretty big situations like that where we've come in after the fact because total control was with one person. So what I would recommend is slowly starting to build out. Now, I'm biased. I think a solution like what we provide, which is giving you that leadership to oversee the function and work collaboratively with your internal team, filling in the gaps. But ultimately, you want to start to build. What a business owner needs is the leadership at the accounting and the financial level. Somebody that can come in and can make sure that there's good processes from everything from the day-to-day accounting, which is paying bills, invoicing, collecting cash, managing cash, making payroll. Good processes means oversight, checks and balances, so that there's no opportunity for anybody to do anything funny on that. Establish a process to close the books every month, and then work collaboratively with the business owner to ensure that they're getting the right visibility through reporting into what's happening. And so that may be basic monthly financials. It may be weekly flash reports, maybe daily reports on certain things, but making sure the business owner gets what they need to have that confidence that they understand what's going on in the business. And then you need somebody in that role that owns it. They can't be a situation where you didn't make payroll because the owner didn't sign off on it, like in your example. And then the controller comes like, oh, well, you didn't sign off on it. That's why we didn't do it. That's not acceptable.
Right.
You need somebody that takes ownership and says, hey, you know what? I noticed you haven't signed off yet. We need to make payroll. You need to sign off and do everything they can to make sure that happens. And make sure there's a process in place to make sure that happens, so that you don't, nothing bad happens. And so that's that big piece, is that leadership at the accounting, and then that finance function that ensures that everybody has a role, defined roles and responsibilities, segregation of duties, and then that the ownership has clarity into what's happening and into their business through the numbers.
Yeah, I think it's so important, and it's the thing that helps you sleep better at night. I'll tell you a funny story. So we had a situation where we had an outsourced accounting firm that was handling our books. We're doing 7-8 figures one year, and that accounting firm had let somebody go, and that person had figured out a way to add themselves to our QuickBooks, right, and put themselves on payroll, and it took 4 months for anybody to notice that this had happened. It was like, what in the world is happening? Now, luckily, only one payment went out to that person during those 4 months, but we had somebody that had access to all of our financial information as well as the ability to write checks. Like, this is not good, guys. So, it's one of those things that as the business owner, you have a million things going on. And the advice you just gave, which is the leadership role and being able to have somebody that takes ownership of this, but then of course the checks and balances, like you got to have that as you start scaling, because at some point one human is not, I don't care what anybody says about Elon Musk, he has an amazing team around him in every business. It's not him doing all this stuff, right?
Right. Exactly.
So the fact is we all got to kind of start thinking like that if we're going to try and grow a business that we can scale and eventually exit.
Yeah,
right?
absolutely. And unfortunately, the example that you gave about that outsourced accounting firm gives people like us a bad name.
Yeah.
And sometimes, and the reality is a lot of individuals or companies start in our space because they think it's easy. Oh, we'll just bring clients. We'll bring on clients and we'll just hire accounting people and we'll just go have them do the work. It's kind of like the same stuff we talked about before. I'll just hire them. They'll go do the work. They'll do a good job. The reality is you can even hire great accountants, but one accountant may do it one way, one accountant may do it the other way. You lose control as a business. You lose control over the quality. It's just like any other business. Yep. So that's what's important to us is creating the processes. We have a client service playbook, how we operate, checks and balances internally that we establish to maintain the quality of the work that we're providing that ultimately create the checks and balances within our clients and their teams so that things like what you just mentioned can't happen. And so unfortunately there's a lot of, it's a low barrier to entry to provide our service, but to grow to any level of substantial size and maintain a good, good name in the marketplace is very challenging.
Yeah, absolutely. No, I appreciate that. All right, Jason. So we're out of time here, but I have one last question for you before we let you go, which is now that you've gone through everything that you've gone through, right? You've started in public accounting, you went and started your own business, and now you've exited your business and you're back, helping in the public accounting space and a lot of other things along the way. What's one piece of advice if you go back to your younger self? Now, whether that's when you first got into the working world or maybe the first time you jumped out and started your own business, what's one piece of advice you wish you can go back and give yourself?
I would say from the earlier days, I think, building a network is so valuable. I mean, if you build a network, you build the relationships within your space and within let's call it, I'm in the business community. That network can be so valuable in how you progress in your career, where you don't even need to ever really go on a job board and look for jobs, because the best jobs could or should come from your network that you know. And so in my early career, when I was at Deloitte and I was working a lot of hours and I was young, and the last thing I wanted to do was go out and build relationships, in the business community. And I didn't really, I was focused on serving my clients, and I was in my 20s and I was, trying to enjoy being in my 20s as well. And so when I started my business, I had to build the network from scratch. And that is building that network and trusted, partners in that space is what really allowed me to grow, build and grow the business I have. And so and then ultimately am part of. And it's still critical in, the success that we have at Citrin Cooperman. And so building that network and going out in the community and building those relationships is so critical. And also just communication, building communication skills is really what's going to get you far in your career in business.
I love that. That's so important. Yep. Couldn't agree with you more. So, Jason, how do people find out more about you and your company?
Yeah, absolutely. So Citrin Cooperman is citrincooperman.com. So obviously a large firm. We have a lot of services. Um, everybody I know and have gotten to know within the firm is very, very collaborative. It's probably the most collaborative firm I've ever been a part of. So super excited about that. I'd love to talk to business owners in any capacity. Feel free to email me directly at the letter J, Kruger, Kruger, at citrincooperman.com. If anyone wants to hit me up on my LinkedIn, I'm happy to do that as well. Pretty easy to find. So yeah, just feel free to reach out.
Awesome. Well, Jason, thanks so much for being here. We'll make sure we put all of that information in the show notes. So if you're watching this or listening to this, make sure you check out the show notes, connect with Jason, especially if you are a business owner looking to scale and exit your business. I think that today's conversation is of paramount importance to you. And let's face it, we can't all know all things, but hiring the right people and bringing the right experts onto your team is really important. So, Jason, thanks so much for being here today.
Yeah, thanks so much, Jeff.
All right, everyone, take care. And you've been listening to the Angels, Exits, and Acquisitions podcast by Angel Investors Network. Look forward to seeing you on the next one. Take care.